A charitable contribution is a donation or gift to a qualified organization, which may be deductible if the taxpayer itemizes. Cash, check, and non-cash contributions should be reported on Schedule A on either the gifts by cash or check line or the other than by cash or check line, respectively. Deductions may be taken for contributions to organizations that operate exclusively for religious, charitable, educational, scientific, or literary purposes, organizations that work to prevent cruelty to children or animals, organizations that foster national or international amateur sports competitions if they do not provide athletic facilities or equipment, war veterans organizations, certain nonprofit cemetery companies or corporations. There is a link that is an online tool for searching for organizations that are eligible to receive tax-deductible charitable contributions. Taxpayers are required to keep receipts and record all of their contributions. You can it refers you to the publication 526 and publication 4012 under tab F for more information. Most taxpayers are going to bring you a receipt for information that provides the information that is needed if they have made charitable contributions to those respectful organizations. Miscellaneous deductions. Miscellaneous itemized deductions include gambling losses and work-related expenses for disabled individuals. Gambling losses can only be taken up to the amount of gambling winnings that a taxpayer claims on that return. All itemized deductions subject to the 2% of AGI limitations are not allowed through the end of 2025. This includes employee business expenses. It refers you to the publication 17, miscellaneous deductions, and publication 4012, tab F, deductions for more information. Out of scope is casualty and theft losses, investment interest, Form 1098-C, contributions of motor vehicles, boats, and airplanes, taxpayers affected by limits on charitable deductions, taxpayers who file Form 8283 to report non-cash contributions of more than $500 that is in scope for military certifications, taxpayers donating property that was previously depreciated, taxpayers donating capital gain property, repayment of income of $3,000 or more, loss of termination of an annuity by a deceased annuitant. Any questions or concerns as it relates to itemized deductions? This lesson explained that unreimbursed medical and dental expenses that exceed the applicable percentage of the taxpayer's AGI are deductible. That is the 7.5% of the taxpayer's AGI. They are reported on lines 1 through 4 of Schedule A. Deductible interest is also reported on Schedule A. Qualified gifts to charity are reported on the Schedule A. Only gambling losses to the extent of gambling winnings and certain other items are allowed as miscellaneous deductions.
Hey, yes, ma'am. Quick question. To do the charitable contribution, do they need to have their receipt for us to view it, or can we just take their word?
As long as it's not unusual, then yes. And if you don't view that as unusual and out of ordinary, then you can more than likely take their word for it. Most likely they're going to have it is very rare that someone is not going to have a receipt or something showing what that charitable contribution is. But if it's a lot of times, if they are itemizing, you'll have someone to remember that, or they'll have receipts for the medical and dental, and then when it gets down to the charitable contribution, they may remember, oh, I paid the tithes to my church, but I don't have that statement. Then you can take their word for that they paid the 10% of their income or whatever that looks like. And so as long as it's not something that's outlandish, then you can take their word for it. But what I always refer you to is your site coordinator, assistant site coordinator, or a more experienced tax preparer. Any other questions or concerns? We're going to get into credits. And the first one that we're going to get into is credit for child independent care expenses. This is a common one that you will see, especially for taxpayers with dependents and the younger taxpayers that are coming in claiming this credit. There are things that taxpayer will need in order to claim this credit. After this lesson, you should be able to determine if the taxpayer is eligible for the credit and be able to calculate the amount of the credit. The good thing about this software is that you don't have to calculate any amount of the credit. All you have to do is to input the necessary information, and the software does all of the calculation for you. Some taxpayers may not even be aware of the credit, but you calculate this credit using the form 2441, which is the child independent care expenses. This is a non-refundable credit. Child independent care credit is a non-refundable credit, and generally the non-refundable credits are applied against tax in the order they are listed on the form 1040 Schedule 3. Don't confuse this credit with the child tax credit. They are two different credits. The difference between a refundable and a non-refundable credit: a non-refundable credit is a dollar for dollar reduction of the tax liability. A non-refundable credit can only reduce the tax liability to zero. A refundable credit can reduce the tax liability and result in a refund to the taxpayer. The child independent care credit is available to eligible taxpayer as a portion of their child independent care expenses. The credit may be claimed by taxpayers who, in order to work or look for work, pay someone to take care of their qualifying person. A qualifying person for the taxpayer is a qualifying child under age 13, a spouse who is incapable of self-care, and a dependent who is incapable of self-care. The credit can range from 20% to 35% of a taxpayer's qualifying child or dependent care expenses. Taxpayers may be able to exclude employer-provided dependent care benefits from income. That's going to show on the form W-2 in box 10 that shows dependent care benefits from employers. Determining the taxpayer eligibility. It refers you to publication 4012, tab G, which shows non-refundable credits. There is a screening sheet for credits for child independent care expenses that you can use to determine if a taxpayer can claim the credit. There are 5 eligibility tests to see if the taxpayer qualifies for the credit. It's the qualifying person test, the earned income test, the work-related expense test, the joint return test, and the provider identification test. The qualifying person test. In the publication 4012 under tab G, using the child independent care expenses tip, it is used to determine who is a qualifying person. The earned income test shows if is used to determine if that person had earned income. The work-related expense test, there is a limit on work-related expenses. It's $3,000 paid for one qualifying person or $6,000 for two or more qualifying persons. The joint return test, generally married couples must file a joint return in order to claim the credit. The provider identification test, the taxpayers must have the care provider's name, their address, and their taxpayer identification number. That information is required in order for them to be able to take this credit. In order to determine the amount of the credit the taxpayer is eligible for, the Form 2441 is used. The software is going to automatically populate that form based on the information that is put into the system. That form is divided into 3 parts. Part 1 is for general information about the care provider. The taxpayer must have that information in order for them to claim that credit. Again, the information that we just covered, the care provider's name, address, and provider number. Sometimes it asks for their phone number. Part 2 is where the credit for child and dependent care expenses is calculated. So they must have the amount that they paid for expenses. Part 3 is where employer provided dependent care benefits are reported. The taxpayer's child and dependent care expenses are subject to an earned income limit. And so all of this is going to be based off all the information that's entered into the software for the taxpayer, as well as the information that's entered in for the dependent. You want to, in order to avoid common errors, we want to double check all the entries that are input into the system. Because if there's an error made for the dependent's date of birth, if there's an error made on the caregiver's information, all of that can result in the taxpayer not getting the credit they deserve for expenses paid for the child care. So we want to make sure the Form 2441 Part 3 is completed. If the taxpayer's Form W-2 shows an amount in box 10. We want to verify 13614C. If that shows the box for child and dependent care is checked. If anything is checked that says that the taxpayer paid anything as it relates to child and dependent care expenses, we want to verify, we want to ask if they paid any money for child care, if they paid anything for summer school, it's summer camp, any of that, they must have documentation to show it in order for them to get credit for it. Any questions as it relates to child and dependent care expenses credit? The child and dependent care credit is a non-refundable credit that allows taxpayers to reduce tax liability by a percentage of their child and dependent care expenses. We want to always make sure the taxpayers know they do not receive the full amount of what they paid for child care. They only receive a certain amount of that. The credit rate is 20 to 35% of the taxpayer's expenses. The maximum expense amounts are $3,000 for one qualifying person and $6,000 for two or more qualifying persons. You don't have to put in, you don't have to know what these limits are. The software automatically applies these limits. There are 5 eligibility tests to qualify for the credits. You don't have to know these as well. The software is going to apply these as well. The credit is calculated and reported on Form 2441. Once you enter this information into the software is going to automatically populate and report this information on Form 2441 respectively. Taxpayers who need assistance in determining if employment taxes are owed for household employees are out of scope for this lesson and for the VITA TCE program. Any questions as it relates to the credit for child independent care expenses?
There was a question in the chat asking if there was any proof a parent would need to get the credit.
They would have to have the form from the daycare, the summer camp. That normally when a child goes to a daycare facility or summer camp, anywhere like that, those facilities provide a form showing what was paid, because they have to have that provider's TIN number. And so they have to have that type of information in order to get that credit.
Thank you.
Mhm. Education credit is the next credit that we're going to talk about. Education credit offsets the cost of higher education by reducing the amount of income tax. This lesson suggests probing questions you can ask based on the intake and interview sheet and on the rules for claiming education credits. At the end of this lesson, you should be able to determine who qualifies for an education credit and which credit the taxpayer can claim. During the interview, you want to ask taxpayers if they are aware of the education credit and give a brief description. Then you want to gather information to determine if any credits can be claimed. Education credits are amounts that will reduce the amount of tax due. The amount is based on qualified education expenses that the taxpayer paid during the tax year. There are two different education credits: the American Opportunity Credit and the Lifetime Learning Credit. For an overview of education credits, it refers you to the publication 4012, tab J, highlights of education tax benefits. To help you guide your interview as it relates to education credits, it refers you also to the publication 4012, tab J, for education benefits. Most time, taxpayers are going to already know what education credit they qualify for and which one they want to take. Sometimes they won't, especially if it's a younger taxpayer who is new to school. You have a lot of taxpayers, younger taxpayers, who you have preparers who have been visiting college campuses trying to garner business, who are giving misinformation as it relates to education credits. And so you have to be mindful of them who are coming into the sites wanting to have these returns prepared just to receive the education credit. And a lot of them are not even aware that they don't even qualify for a lot of these credits because of their age. Disqualifying conditions include if a taxpayer can be claimed as a dependent on someone else's tax return, files as married filing separately, has an AGI above the limit for the taxpayer's filing status, was a non-resident alien for any part of the tax year, and did not elect to be treated as a resident alien for tax purposes. We have a lot of students that come in and don't realize that they've been claimed on their parents' return. And so they come in expecting to be able to claim the education credit, not knowing that they've already been filed on their parents' return. And so we have to be mindful of that when these returns, we have a lot of returns rejected for that particular reason.
I have a question.
Mm-hmm.
When can a say that this is, and I know we'll probably get in it later, but when can a student file themselves credit? I mean taxes. I mean, I know they can file, but when are they able to just flat out to start filing themselves and getting all that credit if the other person just doesn't claim it?
What do you mean?
Like just say a student, a college student is in school and they are, of course, away from home, and they want to file their taxes themselves, they will have to make sure that their parents are not filing them as far as getting credit and all that, right? Is that correct?
Right.
Okay. Okay.
Mhm. So, so a student can file a return for themselves at any point. However, taxpayers, if a student is under age 24, then they cannot claim the refundable portion, of the credit. And so they are limited in the amount that they are able to claim. And so that's where, and so they can depending on how much they've paid, that has been paid out of pocket for their education expenses, then they are limiting themselves on the amount of credit that they are able to get, because they are not able to claim that refundable portion of the credit.
Oh, okay. 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 So is it feasible for them to file?
For themselves. Are you asking, is it feasible for them to file for themselves?
Yes, that's what I asked.
So they can file for themselves. So if they're under the age of 24, the most that they would be able to get for the education credit could be up to $1,000, because they can't get the refundable portion if they're under the age of 24.
Okay. Thank you.
Mhm. However, if they are claiming the American Opportunity Credit, that credit can be up to 2,500.
Mhm.
And so if they're under the age of 24, they're losing that other 1,500 because they're not eligible to get it
Why?
because they're under age 24.
Okay. Okay.
Any other questions before we continue?
No, thank you.
Alrighty. To claim the credit for a student's qualified expenses, the taxpayer must claim the student as a dependent. Expenses must have been paid to an eligible educational institution. There's a database that advises of all accredited schools, and that's the database or the link that's listed there, to find out if the school is accredited. Most times you know that the school that they are attending is an accredited school, but if you have any questions on whether or not it is, you can always search there. Qualifying expenses. Qualified education expenses are tuition and certain related expenses required for enrollment or attendance at an eligible educational institution. Qualified education expenses include non-academic fees, such as student activity fees, athletic fees, or other expenses unrelated to the academic course of institution that must be paid to the institution as a condition of enrollment or attendance. However, for the American Opportunity Credit, the definition for certain related expenses is different from the Lifetime Learning Credit. You want to always ask to see documentation such as the Form 1098-T that has been issued by the school. The taxpayer can add other expenses that qualify for education credit, such as books or supplies that have not been purchased through the school account. Necessary proof of expenses include documents as receipts that have been issued by the school. So although they have the Form 1098-T, which is the tuition statement, they can also have receipts where they paid something out of pocket that count toward these expenses. Qualified expenses must be reduced by the amount of any tax-free educational assistance taxpayers receive. Do not include expenses such as room and board, insurance, medical expenses, transportation costs, or other similar personal, living, or family expenses. Any course of instruction or other education involving sports, games, or hobbies, unless the course is part of the student's degree program. If expenses or scholarships are adjusted in a later year, the school will report the amount in box 4 or box 6 on Form 1098-T. The American Opportunity Tax Credit is what I kind of just touched on in answering that question. It's available for the first 4 years of college per eligible student. The credit covers 100% of the first 2,000 and 25% of the second 2,000 of eligible expenses up to the amount of taxed or a maximum of 2,500. 40% of the credit is a refundable credit. It advises you to see the Form 8863 for which is the instructions for the form that is used to claim this credit for more information. In order to take the American Opportunity Credit, it asks questions like, as at the beginning of the year, was the student still in the first 4 years of post-secondary education? Has American Opportunity Credit been claimed for the student for 4 years? Was the student enrolled in a program that leads to a degree? Was the student taking at least 1/2 the normal full-time load for the course of study? Excuse me. Has the student been convicted of a felony? Did the taxpayer and student have a taxpayer identification number by the due date of the return? And so all of those questions have to be answered in order for the student to be able to take the American Opportunity Tax Credit. The Lifetime Learning Credit is the second education credit that's available to students. The Lifetime Learning Credit can be taken if the taxpayer and the expenses meet the requirements described under what basic requirements must a taxpayer meet. Additional criteria for the Lifetime Learning Credit include the student doesn't need to be pursuing a program leading to a degree or other recognized education credential. The felony drug conviction that is prevalent in the American Opportunity Credit doesn't apply in the Lifetime Learning Credit. This credit is up to $2,000 non-refundable credit per return. It's 20% of up to $10,000 in eligible expenses. It's available for an unlimited number of tax years and not limited to the 4 like the American Opportunity. It's available for all years of post-secondary education and for courses to acquire or improve job skills. No minimum amount of course workload. Eligible students are not required to be enrolled at least half-time or in a degree program. Course-related books, supplies, fees, and equipment are included in qualified education expenses only if they must be paid to the institution as a condition of enrollment or attendance. Again, it refers you to the publication 4012, tab J, Education Benefits for Basic Requirements. Choosing between the credits or no double benefits. Again, you can refer to the publication 4012 tab J for a summary of differences between the 2 credits. Taxpayer cannot receive multiple benefits for the same student's expenses. The education expenses can be taken in any of several areas on the tax return. They can be used toward one of these credits as a business expense on Schedule C, or to reduce the taxable portion of scholarships, fellowships, grants, and distributions from education savings accounts. The definition of a qualifying expense varies amongst these different benefits, but in general, each expense can only be used once. There are general steps for calculating the education credit amounts. You want to review the expenses and decide which credit is going to be the most advantageous. That means the one that's going to give you the bigger credit, the bigger advantage. You're going to enter each qualifying student in the appropriate sections of the Form 8863. Enter each student expenses and find the totals and apply the limits. You don't have to do any type of calculations, apply any type of limits. The software does all of that for you. All you need to do is to answer the necessary questions that apply to each student, enter the expenses, and the software does all the calculations for you. If a taxpayer must repay or recapture all or part of an education credit that has been claimed in a prior year that is out of scope for this lesson and the VITA TCE program. Any questions or concerns as it relates to education credits? Again, there are 2 credits as it relates to education, the American Opportunity and the Lifetime Learning. Taxpayers and students must have a taxpayer identification number by the due date of the return. Education expenses can be applied to those credits deducted on Schedule C. 40% of the American Opportunity credit is a refundable credit, which means taxpayers can receive up to $1,000 even if they have no tax liability. You want to compare the tax effects of the various education benefits and choose the method that results in the lowest tax. All right, we will move right along. Foreign tax credit is the next lesson. This is not something that is common in the VITA TCE program. To be able to determine which taxes and types of foreign income are eligible for the foreign tax credit. Compute the credit accurately using Form 1116. Calculate and report the foreign tax credit as a non-refundable credit. This credit applies to those who have paid or accrued taxes to a foreign country on foreign source income and who are subject to U.S. tax on the same income. To help these taxpayers, you must determine which taxes and type of foreign income are eligible for the foreign tax credit and accurately compute the credit using Form 1116 foreign tax credit. If the foreign tax paid is reported on a Form 1099 INT, Form 1099 DIV, or Schedule K1, completion of the entire Form 1116 may not be required. U.S. citizens and residents compute their U.S. taxes based on their worldwide income. This sometimes results in U.S. citizens having to pay tax twice on the same income. First to the government of the foreign country where the income was earned, and again to the U.S. government. If the foreign tax paid is a result of living and working outside the U.S., use Form 1116 to compute the credit. 4 tests must be met to qualify for the credit. The tax must be imposed on the taxpayer. The taxpayer must have paid or accrued the tax. The tax must be a legal and actual foreign tax liability, and the tax must be an income tax. The foreign earned income exclusion is different from the foreign tax credit. You want to choose the appropriate one that results in lower tax. Taxpayers can report foreign tax on Form 1040 without filing the Form 1116 as long as certain conditions are met. It refers you to publication 4012 under the Income tab, Interest and Dividend Income. To qualify for the credit, a taxpayer must have earned income in a foreign country, have paid taxes on that income in the foreign country, not have claimed the foreign earned income exclusion on the same income. Foreign taxes that generally qualify for the FTC include taxes on wages, dividends, interest, royalties, and annuities. The economic benefit. The foreign tax paid cannot provide a specific economic benefit for the taxpayer and be included in the foreign tax credit computation. This means that the tax cannot be a payment that results in an individual receiving goods, services, fees, or other payments. The right to use, acquire, or extract resources, patents, or other property that the foreign country owns or control, discharges, or of contractual obligations. Taxes paid to or accrued by certain sanctioned countries do not qualify for the FTC. It refers you to publication 514, or you can visit irs.gov for the current list of sanctioned countries. Types of foreign income generally within scope is passive category income and general category income. Passive category income normally include or generally includes dividend, interest, royalties, and rent. Income that is taxed by a foreign government at a higher rate than U.S. income tax is classified as a general category income. Form 1116, to qualify for the foreign tax credit, the taxpayer, income, and taxes must all meet specific requirements. The credit is computed and reported on Form 1116. A separate Form 1116 must be completed for each category of income. Some of these situations are complicated and beyond the scope of the VITA TCE program, such as expenses directly related to the foreign income, investment interest expense, foreign losses, such as those from selling foreign assets or a loss from a business or partnership. In publication 4012, under non-refundable credits tab, there is a step-by-step instruction on completing the Form 1116 if it is needed. Out of scope for this lesson and the VITA TCE program is taxpayers who must complete the Form 1116 because they cannot elect to report foreign tax on Form 1040, Schedule 3, unless your site has a volunteer and a reviewer with an international certification. Taxpayers who may deduct a foreign income tax that is not allowed as a credit in certain circumstances, certain expenses deducted to reduce foreign gross income, taxpayers who must report a carryback or carryover on Form 1116, Part 3, and foreign income from a sanctioned country using the Section 901J income category. Any questions as it relates to foreign tax credit? All right. Child tax credit and credit for other dependents. We know that this is a familiar credit that we will see a lot of during this filing season. The child tax credit is unique because if a taxpayer cannot benefit from the non-refundable credit, the taxpayer may qualify for the refundable additional child tax credit on Schedule 8812, credits for qualifying children and other dependents. In this lesson, we will learn about both credits and their relationship to each other. Some taxpayers may not be aware of these credits. Your time, effort, and understanding of this credit may result in a lower tax for the taxpayer. The child tax credit, credit for other dependents, and the additional child tax credit are entered on Form 1040. The intake and interview sheet, along with the volunteer resource guide, tab G, non-refundable credits, are critical tools needed to determine eligibility for the credit. At the end of this lesson, you will be able to determine the taxpayer's eligibility for the credit, determine which taxpayer can claim the additional credits. The child tax credit is a non-refundable credit that allows taxpayers to claim a tax credit of up to $2,000 per qualifying child, which reduces their tax liability. Taxpayers who claim the child tax credit but do not qualify for the full amount may be able to also take the refundable additional child tax credit of up to $1,500. Again, it refers you to publication 4012, tab G, non-refundable credits. To be eligible to claim the child tax credit, the taxpayer must have at least one qualifying child. If taxpayers claim the child tax credit or additional child tax credit but are not eligible for the credit, they can be banned from claiming the credit for either 2 or 10 years. A child must meet certain criteria to qualify for the credit. There are special rules for children of divorced or separated parents, as well as children of parents who live apart. There is a table in the publication 4012 that refers to the child tax credit. The amount of the credit may be reduced if the taxpayer's modified adjusted gross income is above the limits for the taxpayer's filing status, if the tax liability less the majority of the non-refundable credits is less than the maximum child tax credit. To determine whether a child meets the criteria of a qualifying child for the child tax credit or additional child tax credit, you want to use interview techniques and tools discussed in earlier lessons. You want to begin by reviewing and completing the marital status and household information section of the taxpayer's intake and interview sheet. You want to verify that the child is under age 17 on December 31st of the tax year, live with the taxpayer for more than 6 months of the year, did not provide over half of his or her own support, meets the relationship criteria, is a U.S. Citizen, U.S. national, or resident of the United States, has a valid Social Security number. In order to calculate the credit, you use the Schedule 8812. That's the only document that is used to calculate the credit. It replaced the worksheets that were once found in the publication 972. The good thing about the software, it automatically calculates the credit for you. There's nothing that you have to do in order to calculate the credit besides putting in all the necessary information. You have to have provided the necessary information completed through Form 1040 through the Retirement Savings Contribution Credit line in Part 1 of Form 5695 and the Schedule R. So if you've already put in the necessary information as it relates to the marital status, the dependent information, all the way up through the income information, is going to automatically calculate all the information as it relates to child tax credit. There is nothing that you need to do. The additional child tax credit. This credit is for certain individuals who get less than the full amount of the child tax credit. The additional child tax credit may give taxpayers a refund even if they do not owe any tax. Taxpayers who do not get the full $2,000 of the child tax credit may qualify for the additional child tax credit. The criteria for a child to be a qualifying child for the additional child tax credit are the same as the criteria for the child tax credit. For taxpayers with earned income over $2,500, the credit is based on the lesser of 15% of the taxpayer's taxable earned income that is over $2,500, or the amount of unused child tax credit. That means if that's caused when tax liability is less than the allowed credit. Is noted, or we try to make taxpayers aware that the refund for taxpayers claiming the child tax credit is not issued prior to February 15th. Most times when they go to check their refund on IRS.gov, where's my refund, there's a note that advises them those refunds are not issued prior to February 15th. The credit for other dependents. There is a $500 non-refundable credit for dependents who do not qualify for the $2,000 child tax credit. The dependent must be a U.S. citizen, U.S. national, or resident of the U.S. The dependent must have a valid identification number. That can be an ATN, ITN, or SSN. That's an adoption taxpayer identification number, an ITN, or a social security number. Taxpayers cannot claim the credit for themselves or a spouse if married filing jointly. Taxpayers that exceed the modified adjusted gross income limits for the credit for other dependents will not get the full amount of the credit. The tax software automatically applies the modified adjusted gross income limits and phase outs based on the filing status of the taxpayer. The $500 non-refundable credit covers dependents who don't qualify for the child tax credits, such as children who are age 17 and above, or dependents with other relationships, such as elderly parents. Taxpayers cannot claim the credit for themselves. Avoiding common errors. When considering the child tax credit or credit for other dependents, it is critical to interview the taxpayer thoroughly and complete the dependent section of the intake and interview sheet to correctly identify eligible children or other dependents. Note any unusual situations on the intake and interview sheet. Any questions or concerns as it relates to the child tax credit and credit for other dependents? The child tax credit allows taxpayers to claim a tax credit of up to $2,000 per child. When the dependent is not eligible for the child tax credit, they may be eligible for the non-refundable $500 credit for other dependents. The qualifying child must have a valid SSN by the due date of the return, including extensions. To claim the credit for other dependents, the dependent must have a valid identification number by the due date of the return, including extensions. If taxpayers claim the child tax credit or additional child tax credit, but are not eligible for the credit, they can be banned from claiming the credit for either 2 or 10 years. We are going to move right along. This next lesson talks about miscellaneous credits. This lesson talks about or gives information about other non-refundable credits. You should be able to determine if a taxpayer qualifies for the retirement savings contribution credit and accurately complete Form 8880, credit for qualified retirement savings contributions. Calculate the credit for the elderly or the disabled by completing Form 1040, Schedule R, credit for the elderly or the disabled. The retirement savings contribution credit is a non-refundable credit eligible taxpayers may claim if they made a qualifying contribution to a retirement plan. If the contribution is a tax deductible, such as a traditional IRA, the taxpayer receives the benefit of the tax deduction and a tax credit. This is considered a double benefit and is rarely allowed. Contributions to non-deductible accounts, such as Roth IRAs, can qualify the taxpayers for the credit as well. The credit is calculated on Form 8880, credit for qualified retirement saving contributions. Generally, an individual who made a voluntary contribution to a retirement account is at least 18 years of age, not a dependent, and not a full-time student may be eligible to claim this credit if their income is not too high. It refers you to publication 4012, non-refundable credits tab, retirement savings contribution credit screening sheet to determine if a taxpayer qualifies. There's going to be information listed on the Form W-2 in box 12 and 14 if that taxpayer paid anything that will make them eligible for that credit. It refers you to instructions for the Form W-2 for a complete list of those box 12 codes. Distributions received during a testing period may reduce eligible contributions. It's not necessary for you to know what those codes mean. All you have to do is to enter those codes in the W-2 when you are inputting that information into the software. It's going to automatically populate that Form 8880 for that retirement saving contribution credit if that taxpayer is eligible for it. The credit for the elderly or disabled is calculated on Schedule R and reported on Form 1040, Schedule 3. Qualified individuals must be age 65 or older at the end of the tax year or under age 65, retired on permanent and total disability. It refers you to publication 4012, the non-refundable credits tab for more information. There is a decision tree there to figure out if that person is a qualified individual and as well as income limits as it relates to that credit. Mortgage interest credit. Mortgage credit certificates or MCCs issued under a state or local government program may qualify for a non-refundable credit for mortgage interest paid. The amount of the credit is on the certificate. This type of mortgage interest credit is out of scope for the VITA TCE program. Okay, I don't know what's going on with that. Residential energy credits. Individual who purchase qualified energy efficient improvements for their main home may be allowed non-refundable tax credits. There are two types of residential energy credits. The residential clean energy credit. It was previously named the residential energy efficient property credit under the Form 5695. Residential energy credits part 1 that is out of scope for the VITA TCE program. Also, the energy efficient home improvement credit. It was previously named the non-business energy property credit, and that's claimed on the Form 5695, which is under part 2. The residential clean energy credit is claimed on 5695 part 1 is out of scope for the VITA TCE programs. For awareness only, taxpayers may be eligible to claim an energy credit for solar panels, solar water heaters, full cell property expenditures. Check for quality energy property purchases to determine if the taxpayer should see a professional tax preparer to claim the credit. It refers you to publication 4491 for temporary provisions, under the temporary provisions lesson for more information. All right. Non-refundable credits are reported on the applicable lines of Form 1040, Schedule 3. Credits cannot exceed the taxpayer's federal income tax. It refers you again to publication 4012, non-refundable credits tab for more information. As discussed, mortgage interest credit is out of scope for this lesson and for the VITA TCE program. Any questions or concerns as it relates to miscellaneous credits? All right. This lesson talks about other taxes. The objective is to identify the different types of other taxes on a return, determine if a taxpayer is liable for other taxes that are within the scope of the volunteer program, determine how to report these additional taxes on the tax return, and complete the applicable forms or schedules. Other taxes are usually calculated on their own form or schedule and are added after the non-refundable credits are calculated. Other taxes include self-employment tax, Social Security and Medicare taxes on tip income, additional taxes on IRAs and other qualified retirement plans, household employment taxes, and repayment of first-time home buyer credit. It refers you to publication 4012, other taxes and payments and refundable credits tab for more information. The first time homebuyer credit was a credit that was first introduced. I think it was back in 2008, maybe. And there was a 15-year payback period for some of those. And so I don't know if some taxpayers are still required to pay that back. And so if it's rare that you will have taxpayers that are still required to pay that back. If there is an instance that you a taxpayer is required and they don't mention it, that return you will know because that return will reject for that reason. Self-employment tax, comes from a Schedule C. And so the others are something that you may or may not see in the course of filing those returns. Self-employment tax is Social Security and Medicare taxes collected primarily from individuals who work for themselves. Self-employed taxpayers who receive Form 1099 miscellaneous must file Schedule C and Schedule SE. Schedule SE has a long and short version used to calculate the SE tax. Tip income. Workers who receive $20 or more per month in tips must report their tips to their employer. The employer reports these tips as part of the wages on Form W-2 Box 1 and withholds Social Security and Medicare taxes and federal income tax. An employee who receives $20 or more in unreported tips per month must report the income on Form 1040 and pay the Social Security and Medicare taxes. Taxes for unreported tips are calculated on Form 4137, Social Security and Medicare tax on unreported tip income. You can read more about that in publication 4012 under the income tab. Qualified retirement plans. Traditional IRAs and other qualified plans allow individuals to defer paying taxes until the funds are distributed. The taxpayer must pay income tax plus an additional tax as a penalty if any of the following apply. a distribution is taken before the individual reaches the age of 59 and a half, and it is not rolled over into another qualified plan or IRA that is in scope for the VITA TCE program. Minimum distributions are not withdrawn when required. That is out of scope for the program. Excess contributions are not removed by the due date of the return, including extensions. That is also out of scope for the program. Qualified individuals that receive coronavirus-related distributions are not subject to the 10% additional tax on early distributions. And it says to see the retirement income lesson for details, but I don't think that was covered in that lesson. The 5329 Part 1, that is the form that is going to be used as it relates to the additional tax on early distributions in order to for that additional tax or penalty that is addressed for that distribution. Line 1 shows the amount of distribution included in income. Line 2 is the amount that qualifies for an exception. Line 3 is the amount subject to additional tax. Line 4 is the additional tax carried over to Form 1040, other taxes. And so the software will ask, is there a reason that the additional tax should not be charged? And if there was, the taxpayer says, I took it out for educational reasons, for to purchase my first home or anything like that, then you can put in an exception on that form 5329. The first time home buyer credit. Certain situations require the credit to be repaid and reported in the Form 1040 other taxes section. Determine if the taxpayer claimed the 2008 home buyer credit and must pay back a portion of the credit each year. If the taxpayer is required to repay the credit, it is calculated on the Form 5405, first time home buyer credit, and repayment of the credit. For exceptions to the repayment rules, you would see the instructions of the Form 5405. Taxpayer repaying an installment of the 2008 credit are not required to file the Form 5405. In order to figure the total tax amount on the Form 1040 includes the tax on all income, adjustments to income, deductions, non-refundable tax credits, and other taxes. The next step in entering tax payments and refundable credits. Final calculation is the amount of taxes owed or the amount overpaid that would result in a refund. Out of scope is household employment taxes, IRA minimum distributions not withdrawn when required, excess contributions to an IRA not removed by the due date of the return, including extensions. Part 2 through I think the 6 of Form 5329, only Part 1 is in scope. Distribution from an able account that exceeds the qualified disability expenses. Individuals subject to the additional Medicare tax on Form 8959. Individuals subject to the net investment income tax on Form 8960. Any questions as it relates to other taxes? All right. The next lesson talks about earned income credit. And we know that is one that is very common.
Miss LaQuisha,
Mm-hmm.
there was someone in the chat who asked if we could take a break.
Okay. we can take a break and we can be back at 7:30. Does
Thank
that work for everyone?
Yes.
All righty. All right, are we back?
Yes.
All right.
Yes.
Yes.
The next lesson that we'll cover is earned income credit. This is a common credit that you will see a lot of. At the end of this lesson, you will be able to determine if a taxpayer is eligible for the earned income credit and calculate the earned income credit. The Earned Income Credit, or EIC, is a refundable tax credit for most people who work but do not earn high incomes. The purpose of the Earned Income Credit is to reduce the tax burden and to supplement the wages of working families whose earnings are less than the maximums for their filing status. Eligible taxpayers can receive a refund with this credit even if they have no filing requirement, owe no tax, and had no income tax withheld. All taxpayers and dependents must have a valid Social Security number by the due date of the return, including extensions to claim the credit. The refund for taxpayers claiming the EIC will not be issued prior to February 15th. The EIC can be a very valuable credit. The EIC was permanently expanded to allow families to claim credit for 3 or more children. The EIC amounts are adjusted for inflation every year as shown in the important changes lesson. The EIC is reported on its own line on the tax return. Qualifying for the EIC. There are general rules set for claiming the earned income credit. There are rules for everyone. Rules for taxpayers with a qualifying child, rules for taxpayers who do not have a qualifying child. It refers you to the publication 4012, Summary of EIC Eligibility Requirements. It tells you to focus on Part A and Part D. It tells you to how to avoid common EIC filing errors. Some of the most common ways to make errors as it relates to the earned income credit is incorrectly reported income, incorrectly reported SSNs, married taxpayers incorrectly filing as single or head of household, claiming a non-qualifying child. Qualifying for earned income credit. This is what are some examples of earned income that may qualify taxpayers for earned income. Earned income include wages, salaries, tips, and other taxable employee pay and self-employment income. It refers you to the earned income table for a complete list of what is earned income for earned income, for the earned income credit, and what is doesn't include, what is not included as earned income. Rules for taxpayers with qualifying children. Claiming a child who is not a qualifying child is one of the most common EIC errors. You want to ensure that you apply the rules correctly. And one thing that I want to stress is not for you to worry about or stress about if a taxpayer comes in and they have that person listed as their dependent, and you're trying to verify if that person is their child, is not their child, is their dependent, if that person lived with them for 12 months, if they come in and they have the documentation and they're saying that is their dependent, that person lived with them 12 months, it is not up to you for you to decide whether or not they have the right to claim that dependent. That's on the Internal Revenue Service, the examination department, and all of that for them to do their due diligence and their job. If you have done what it is that is required of you, under the guise of your volunteer standard of conduct and your due diligence under the VITA TCE program, that you've done what it is that you're supposed to do. Everything else is not for you to do. If they provided the documentation, the social security card, and everything else that is required for you to verify that that dependent is theirs, then there is nothing else for you to do in order to qualify that dependent as theirs. It refers you to the publication 4012, tab I, earned income credit, for the summary of EIC eligibility requirements, the EIC general eligibility rules chart, EIC qualifying child chart, and qualifying child of more than one person. You can always make them aware that if they are claiming dependents that are not theirs, they can be disallowed these credits for a set number of years. These credits can be removed. It can result in them owing a balance, including penalties and interest. That is all that you can do as it relates to your due diligence. Rules for taxpayers without qualifying children. Rules are presented in publication 4012, tab I, earned income credit, part C, and EIC charts. They cannot be the dependent of another person. You want to check part 1, question 11 on form 13614C. They must have lived in the U.S. more than half the year. You want to always check the form 13614C, where it asks, did you or your spouse have EIC disallowed in a prior year? If yes, there are special rules in the publication 4012 where it says disallowance of the earned income credit. There is if the EIC amount is determined using worksheets in the EIC tables, that is found in the publication 596 or in the form 1040 instructions. The good thing again about this software is that you don't have to do any type of calculation. The software does it all for you. Once you have input the necessary information, the software is going to do all of the calculations. It's going to do all of the worksheets, all of the necessary schedules and forms for you. All you have to do is to put in the necessary information where it goes, where it is allowed, and it's going to do all of the necessary calculations and formulations for you. Are there any questions or concerns as it relates to the earned income credit? The earned income credit computation is based on filing status, number of qualifying children, earned income, and adjusted gross income. Certain individuals with no children may also qualify. By using the intake and interview sheet, the EIC charts, and the volunteer resource guide, and correctly entering the taxpayer's data in the software, most of the errors that result from incorrectly computing the EIC can be avoided. The EIC is entered on its own line of the return. Any questions or concerns? The payment section is the last section that we'll go over before we hop into the advanced certification portion of this training. Identify the following types of payments and credits that are applicable for most low and moderate income taxpayers. Federal income tax withheld from forms W-2 and forms 1099. Estimated tax payments and amounts applied from the prior year's return. Amount paid with a request for an extension to file. Excess Social Security in Tier 1 RRTA tax withheld. And report these payments and credits correctly on the taxpayer's return. Federal income tax withheld. The total federal income tax withheld is entered in the payment section of the Form 1040. You're going to use interview techniques in the Form 13614C in order to determine the payments and credits and know where to report those. It refers you to the publication 4012 tab H, other taxes, payments, and refundable credits sections. It also refers you to publication 505, tax withholding and estimated tax, for more information as it relates to the federal income tax withheld. Most income statements that you receive have a federal income tax withheld box. You want to ensure that you are reviewing each of these income statements so that you are picking up every line on those payments. It's so easy to overlook a box on these statements, a W-2 or 1099-R, the Social Security statements. It's so easy to overlook a box. So we want to ensure that we are looking at every statement that we receive to ensure that we are picking up every box that has an amount in it. Estimated tax payments. This is not something that a taxpayer will have a statement for. If a taxpayer has made estimated tax payments, they'll need to make you aware so that you can input that into the system so that they can get credit for any type of estimated tax payments that they made. Estimated tax includes income tax and self-employment tax. If estimated payments are not paid when required or amounts are insufficient, a penalty can be imposed. From Form 13614C, an interview, determine if taxpayers paid estimated tax. If yes, ask to see the taxpayer's Form 1040-ES. It refers you to publication 505 and the Form 1040-ES. Don't confuse estimated tax payments with payments taxpayers pay on installment agreements. There are two that are totally two different things. If they make payments on an installment agreement, those are one thing. Estimated tax payments are a different payment. Amounts applied from a previous year. Taxpayers who overpay income taxes from one tax year can apply all or part of their refund to the next year's tax. From Form 13614C and your interview, determine if taxpayers overpaid income tax last year and if they applied any part of it to this tax year. If yes, ask to see last year's return to verify the amount. Add the amount to the estimated tax payments and enter the total on Form 1040. Again, this is something that you won't readily know. This is something that they'll have to advise you of if they applied their refund from last year to their return for this year. Form 4868, application for automatic extension of time to file U.S. individual income tax return, extends the time to file until October 15th. An extension must be filed electronically or on paper by the due date of the return. If taxes due are not paid by April 15th, taxpayers may owe interest and penalties. It refers you to publication 4012, tab M, other returns, filing for an extension. We always want to make a taxpayer aware if they are filing for an extension, that extensions gives them extended time to file, not a time to pay. Excess Social Security in Tier 1 RRTA. A taxpayer with more than one employer may have a combined income over the amount for the Social Security wage base, resulting in overpayment of Social Security tax. The excess amount is entered on Form 1040, Schedule 3, and is a refundable credit. Tax layer computes excess Social Security taxes automatically based on entries from Forms W-2. Out of scope for this lesson and the VITA TCE program is taxpayers who claim any of these types of credit. Form 4136, which is credit for federal tax paid on fuels. Form 2439, notice to shareholder of undistributed long-term capital gains. Form 8839, qualified adoption expenses. And Form 8885, health coverage tax credit. Any questions or concerns as it relates to payments? All right. Does everyone have access to the practice lab?
Yes, ma'am.
Yes.
All right. So what we are going to do is to access the practice lab so that we can go, and what I want to attempt to do is to walk through one of the scenarios in the advanced certification so that we can see what that looks like. Hopefully we can get through more than one. But if not, hopefully we can get through at least one of them. And so you will need your Form 6744, as well as access to the practice lab.
You said Form 6744. Is that what he sent to us in our email? Because I have not been able to access. I tried to go to rs.gov in my job, but it wouldn't let me. Something going on with my computer there, so I have to do it here now. I've been trying, but anyway, I don't have that yet, or account yet.
Let's see if I'm able to.
Is there a certain page that we need to turn to in the 6744?
I dropped the link for the 6744 in the chat.
Okay.
In the
Thank you.
In the 6744, the advanced scenario 7 is the first scenario that requires you to do a tax return. So that's the first one that we can do.
Ms. Quisha, is all the questions for the advanced test is in this 6744 as well?
Yes.
Thank you.
Hold on 1 second, guys.
Get rid of the flabby arms, the fat wings workout. Now, exercise number 1, we're simply going to
Is it the scenario with Owen and Kimberly Walker?
No, it's advanced scenario 7 is Matthew and Rebecca Monroe. It's on page 81.
Thank you.
Mm-hmm.
I have a question. Is anyone else getting the username is currently inactive for this location message?
For
The TaxSlayer Pro.
no, what are you logging into?
The website I'm on is vital.taxslayerpro.com or Pro Avalon Core Link.
You trying to log into the practice lab?
Yes, ma'am. I thought I bookmarked it, but I must. It
It's
must be
asking
this.
the password for the lab. What password we should use?
Train Pro Web. It's in the chat.
Oh, it's not working.
Okay, so hold on, let me share.
I was
Okay.
having the same problem and it worked just now for me after I did the Train Pro Web, then I was able
Right,
to
so
implement
you
stuff.
should start here. Right?
Yeah,
And so you should go here to practice lab.
that's correct.
All right,
And it's asking password for me for some reason.
right. So let me log out. And so
Yeah.
here, so
Yeah.
you should start here.
Yeah.
And so here should be Train Pro Web. The universal, so here it should be Train Pro Web, all caps, all one word. I think I entered the right one. Yeah. And so then you should log in here. You should have created a username and password to get here.
Yeah, thank you. It did work.
Mhm.
You said page 87, right?
I think it's page 87. Page 81. It starts on page 81.
Okay, let me see. I got the publication form. Sign in.
Miss LaQuisha, can you go back to the home page and show me how you went to this again?
Mm-hmm.
Practice
What screen are you seeing?
Yeah, this screen right here.
Okay.
Okay.
So under quick links,
Okay.
you're gonna click on practice lab.
Okay. And then put that, you said Train Pro Web, right? All
Uh-huh.
cap.
Hold on, yeah, I'm still logged in, so it's not going.
Okay.
For this test, I put this in the chat, but if anyone can't see it, just remember we're doing the advanced test, not the basic. And you'll see that it starts with the advanced questions, and it'll say advanced test questions, and it'll switch to advanced retest questions. For the first time, you only need to focus on the advanced test questions. So skip all the basic, and any ones that are marked as retest, make sure you're not doing those right now. The retest is only if you need a second attempt, if you don't pass the first test. So just make sure right now the ones we're doing are advanced tests, and that should be between pages 69 and 103 of the pub. 6744. Those will be the pages for the first test.
So you said 67 through.
Pages in the 6744, the test that y'all will be taking will be pages 69 through 103.
103. Okay.
Because then after 103, you'll see that it starts over. It says advanced scenario number 1 again. That's the beginning of the retest. So you won't need to go that far unless if you don't pass the test the first attempt, then you'll take the retest. But for now, just focus on the advanced test number 1. Yeah, pages 69 through 103.
Okay. Get in there first. All right then, thank you.
I have a question. Once we log in, where do we go? On the practice lab, after we reach the home section?
I think she's getting logged in here so she can demonstrate, but you'll go to create new return. So for these scenarios we're looking at in the test, essentially, they'll have samples of forms that we'll see at the tax site, the ones we've been studying, and we're just going to do kind of a mock tax scenario where you'll type in the forms into TaxSlayer to kind of prepare a return in the training lab, and that'll help you answer the questions on the test.
I have a question. Once we get through the password, the sign in, are we using the login and password for the actual test? Or are we creating a new, or do we create a new account here?
No, so
tax-
for the
sorry,
practice
go ahead.
lab is different. For the practice lab is totally different.
Okay, so we have to create a new login and password for that.
Right, because for the practice lab, your password has to be at least 15 characters.
That's what it is. Okay, thank you.
Mm-hmm. So once you've created a username and password for the practice lab and you sign in, this is where it should take you.
Ma'am, what's the scenario number 8 we're working on it?
7.
7. Okay, thank you.
Ms. LaQuisha,
Mhm.
it's asking for a site in the identification number. Do I put anything
Are
there?
you creating
The practice lab.
you creating a password?
Yes, ma'am. And
No,
again, my
so
account.
you don't need any of that.
Okay, gotcha.
So if you're creating an account, no, so the only thing you're gonna need is email address, username, password, your program type, which is VITA. You can bypass the SIDN and you're gonna do the security question and security answer.
Thank you.
Mm-hmm. For those of you that are already in, then you're gonna go to advanced scenario 7, which is the first one that requires you to input a return in your form 6744. So in the practice lab, you're gonna start a new return. In your form 6744, on page 81, it gives you all the information that you need. This is your interview notes from your 13614C. Anywhere where it has X's, you're going to replace that with any 4 digits. Is everyone into the practice lab? Have created an account, have gotten into the practice lab?
No.
Yes.
For the person that said no, what's the issue?
The login, username and password. Just trying to get one in.
Okay. So it has, it has to be at least 15, minimum of
Okay.
15.
For the password?
Or, yes, for your password, it has to be a minimum of 15.
Okay.
Okay, so once we get into the practice areas, you say start a new return.
Uh-huh.
Okay.
And you're gonna use the information from here.
Okay.
Once I get everyone in to at least to their starting point, then I'll start you all there.
You said start a new return. Okay, so I'm in the practice lab home. So if I just go to practice area because I just got in. Or do I see section 1 get it started with Text Layer Pro online.
Okay, hold on. So you signed in.
Yes, ma'am.
So you got here. You went past
Ye-
here.
Yes,
You-
ma'am. There.
So you're here.
Okay, so I go to practice area and then then I see message center and rejected client.
And so you start with start a new return. And then that's where you're gonna use the information from the 6744.
Yes, ma'am.
Ma'am, the one with the password issue, and you still having trouble?
Yes, almost there.
Okay.
So Ms. Rucker, at this point, what are we doing? Putting in what numbers?
Okay, so you're here, right?
Yes. Uh-huh.
Okay, so you should be at page 81 of the 6744. And so we're now starting the return for Matthew.
Okay, I'm in the login part of the practice. It just took me a while to get there. I'm having trouble. I'm in the user sign-in part, so I need to make up my own password now in the practice lab.
So you've never made up the username and password?
No.
Okay, so you need to create a username and password.
Okay. And you said the username had to be, the password had to be 15 digits.
At least 15 characters, right?
For each one or just the password?
Just the password. And for everyone else who is already there, we are starting the return for Matthew Monroe. So,
Doesn't that scenario start on page 75? And the questions are on 81? I mean,
in the printed book, yeah.
It starts on 75, yes.
Okay.
If the page numbers are different, the physical copy, then I want to specify when I said pages 69 to 103, I'm looking at the PDF of the publication on the IRS's website.
Right.
So double check those page numbers if you're using any other copy.
And make sure you're using the updated book.
The advanced test questions for scenario 7 in the printed book are on page 83.
Yes, that's what I have.
Okay, I'm sorry, it took me too long. Now we are going to what page?
$75 in the printed book.
Okay. Okay, I'm there and I need to know where to be on the practice lab. Okay, I'm there, yes.
Miss LaQuisha,
Yes, ma'am.
with we doing this social security number, are we like making it up like the last four?
The last four, anywhere that you see X's, you're gonna put those, you're gonna replace those with any 4 digits that you
Okay.
choose.
Okay, thank you.
Mhm.
I selected Tennessee, but they have state tax. Do you think I should put different state, like a New Hampshire or something?
That's up to you. So it tells you to use your state, your city, state, and zip.
Yeah, but there is a state tax portion, so that's why I'm asking. And then the W-2.
But it still tells you to use your city, your state. And so it's up to you whether or not you want to use that or not.
Okay, I'm finally in the practice lab, and you said go get started with taxpayer Slayer.
Oh my God.
I'm sorry.
This don't make no sense. It makes no sense at all for you to do this.
I'm sorry, what are you having trouble with?
Go to practice area. Okay. I was trying to see where to go now. I was finally in the practice lab, and I was trying to see where to go.
So have you made it here?
Yes.
Okay.
And I just started a new tax return. That's where I started.
Yes.
Okay. Okay. I don't know how I'm gonna do this. I know what I did, and I have a hard copy. LaQuisha, I hate to bother you.
Mhm.
Is this first test, is it started with Lydia Rollway? Is that what we starting at on page 69?
No, we're starting at the advanced scenario 7. It's page 75 in the hard book. The hard copy.
Okay, Matthew and Rebecca
Matthew and
Monroe.
Rebecca, uh-huh.
Okay, all right, thank you.
Yes, so when you're taking the actual test on your own, that'll begin on page 69, but just for this training, Rucker's gonna take us through one of the tax layer scenarios, which don't start a little bit later in the test.
Oh, may I know what's the form for cancellation debt?
What's the
For the cancellation of debt, what form we need to use?
what form?
Mhm.
It's the 1099-C.
Okay, thank you so much.
Mhm.
Okay, I have a quick question. When I was entering the W-2 for Matthew, once I put in his income, box 3 through 6 auto-populated, but box 4 doesn't match the W-2. Do I just go ahead and change that to what the W-2 shows me?
Well, so when you are entering the W-2, when you enter the information in box 1 for the wages, 1, 3, and 5 are going to automatically match. You have to 3 and 5 are going to automatically change. So you have to change those because those boxes don't match.
Okay.
So 1, 3, and 5 are going to automatically populate from what you put in box 1. But on 9 times out of 10, 3 and 5 are not going to be the same as 1. And so you're going to have to verify that information on that W-2. And so that's why your 4 and 6 don't match, because the 3 and 5 are different.
So we pulling the information from the 13614C
For
Matthew Monroe
For what information?
to fill out start a new return.
Uh-huh.
Okay, so how do I get mine is sideways and I can't get the screen to rotate. So how do I
You should it's open in PDF, so you should be able to get it to rotate in your PDF.
Miss Marietta, are you using a computer or are you on the phone for your PDF?
I'm using my computer.
If you go up under view, up under the PDF, and there's a button that says rotate. And it'll be clockwise. If not, you can use Shift, Control, and the plus sign, and that'll rotate it clockwise for you as well.
Thank you.
Sorry. What's the form for the educational expenses? Is it a miscellaneous 1099 miss? Like a teacher expenses?
If it's like teacher expenses, those don't have a form. That's just if they're a teacher, they say they spent more than $250 on classroom supplies, and we can take their word for it. So there won't be a form associated with those all the time. Actually, I don't think there is a form associated with those. We just take their word for it if they're teachers. They say they did that.
So yeah, I mean, they get $300 credit, right?
Right. So you go under adjustments.
Oh, okay, gotcha. Oh, educator expenses, gotcha.
Right. So yeah, so it's under adjustments, educator expenses here.
Okay, the deduction part, okay.
So under adjustments,
Okay, I got it. Thank you.
under deductions, adjustments, educator expenses.
And yes, sorry, I think I said 250. I think it was
300.
increased to 300 first. Right.
You put 850, it's rejecting, so 300.
And you can put whatever amount is going to take. It's going to put the limit.
Yeah, that's
So
system not
yeah.
letting me go. Yeah.
Right. I don't know how far you all have gotten on the 1099-R for Rebecca. Did you all notice that the taxable amount was not there?
Yes.
Yes,
So what did you all do?
I removed it.
You need to use the simplified method.
Right. So for I didn't see who there was that used the simplified method. What information did you use for the simplified method?
Put in the gross distribution. I have a cold, so I sound funny.
Are you fine?
I have put in the gross distribution. Let me see what the method look. I'm not looking at the form because I've already done this. So the 15, let me find it again. The distribution was 20,000. The employee contributions was 15. And I put in, since it's a joint, I put in the birthdays for both spouses. So it would add it up to 123. Oh, you got the form up. Okay. I put in the starting annuity date for November the 1st, 2020, I believe it was. And the plan cost at annuity start was 15,000. Number of months, let's see. Death benefit, I didn't put anything. Age of recipient was 66. And her spouse was 57, so I think it added up to 123. Number of months paid in 23 was 12. The amount previously recovered was 15. What was that? 15 something. Where is she? Oh no, 1259.
That is correct.
I'm sorry?
I said that is correct.
Okay.
So is all that information somewhere and I missed reading it or something?
The simplified. Yes,
Yes.
it's in the 1099-R retirement income lesson. It goes more into detail in the publication 4491.
Ms. Rucker, even though on the 1099-R, when we put in a fake payer ID and it populated the address, do we just change the zip code or just go with what's there?
You can go with what's there. You don't have to change anything.
Okay.
It's 8:35. I don't want to hold you all past the time. We can go over the scenarios up through scenario 7 if you all want.
Works for me.
Yes, yes.
Okay, so keep in mind scenarios 8 and 9 is going to require you to enter a return, just like you're doing with scenario 7 in the practice lab. You're going to use the 6744, the information just like you're using with scenario 7. You will have to enter the return in the practice lab using the information in your 6744 for scenario 8 and 9 in order to answer the questions for the scenarios 8 and 9 in order to finish the advanced certification. All right. The first 6 scenarios do not require a return. We'll read through the interview notes and then we'll answer the questions. And so we'll get up through scenario 7, and then 8 and 9, you'll have to complete those returns. And we'll get as far as we can until 9 o'clock. As close to 9 o'clock. All right. Sound like a plan?
Yes.
Yes, ma'am.
All right. Let's go. So advanced scenario 1 is for Lydia Roadway. And so it says Lydia's husband Morgan moved out of their home in February 2021. Lydia has had no contact with Morgan since he moved out. Lydia and Morgan are not legally separated. Lydia has 1 child, Mary, age 10. She will claim Mary as a dependent on her 2023 tax return. Lydia is 31 years old. She earned $42,300 in wages and received $50 of interest. Lydia had lottery winnings of $2,000 reported on Form W-2G. She paid all the costs of keeping up her home. She provided over half of the support for Mary. They are all U.S. citizens and have valid Social Security number. They lived in the U.S. all year. What is the most beneficial allowable filing status that Lydia is eligible to claim on her 2023 tax return?
Head of household.
Head of household.
Does everyone agree?
Yes.
Yes.
That is correct. It's D. Number 2 says, based on the information provided, Lydia qualifies for the earned income. Is that true or false?
True. True.
I think she may have made a little too much for the earned income.
But does she qualify?
Yeah.
Yes.
Depends on your income. 1 kid.
The answer is true. She qualifies. Number 3, Lydia is required to report her lottery winnings as income on her federal tax return. Is that true or false?
True.
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 That's correct.
The second question, is it based on the income? You said it's true.
So it's not asking, will she get it? It's just saying, does she qualify?
Okay, I got it. Thank you.
Advanced scenario 2 is for Scott and Barbara Gems. They are married and want to file a joint return. Scott is a U.S. citizen and has a valid social security number. Barbara is a resident alien and has an I-10. They resided in the United States all year with their children. Scott and Barbara have 2 children, Maria, who is 8, and Louis, who is age 16. Maria and Louis are U.S. citizens and both have valid social security numbers. Scott earned $22,000 in wages. Barbara earned $20,000 in wages. In order to work, they paid $2,000 to Louis to care for Maria after school. Scott and Barbara provided all of the support for their 2 children. What is the maximum amount Scott and Barbara are eligible to claim for the child tax credit?
A, 2,000. A. No, C, because they got two.
$4,000, right? 2,000 per
C,
kid.
4,000. Yeah, because they got 2 children.
Yeah.
It is correct, it's 4,000 because they're both under 17.
Yeah. I got 2 children.
The Gemses qualify for the child independent care credit. Is that true
Yes.
or false?
True.
True.
The child independent care credit?
Yes.
Yes.
Why?
I think Maria is too old for the dependent care credit.
Now, this is child independent care credit. This is for daycare or child care.
Oh, no, because they pay their son to look after her, so no.
That is
Yeah,
correct.
you got to have a EIN for the care facility, right? It's got to
That's
be a
correct.
registered facility.
That's correct. So it's false. Because they paid it to the son, it doesn't qualify.
Cool.
Oh, hold on a second.
So 5 is B. That's false. They don't qualify for the child independent care credit. Does everyone understand?
Yes.
Yes.
So scenario 3 is for Rose Jones. Rose is 57 and she's single. She earned $52,000 in wages and was enrolled the entire year in an HDHP plan, which is a high deductible health plan with self-only coverage. During the year, she contributed $2,000 to her health savings account, or HSA. Her mother also contributed $1,000 to Rose's HSA. Her Form W-2 showed $850 in box 12 with code W. She has Form 5498 SA showing $3,850 in box 2. She took a distribution from her HSA to pay her unreimbursed expenses. She had 8 visits to a physical therapist. She had unreimbursed doctor bills, prescription medicine. She replaced a crown. She did deep cleaning for her teeth. She had over-the-counter medication. She also had a gym membership. Rose is a U.S. citizen with a valid Social Security number. Number 6 says Form 8889, Part 1 is used to report HSA contributions made by who? Rose, Rose's employer, Rose's mother, or D, all of the above. I don't think that our lesson really went into the Form 8889, Part 1, or did it?
Is it D?
It is D, all of the above. Form 8889 is for the health savings account contributions, and it shows contributions made by everyone. So it is D, all of the above. Number 7 says Rose is eligible to contribute what additional amount to her health savings account because she is age 55 or older?
C.
I didn't hear it.
C.
C. $1,000. That is correct. Number 8 says, what is the total unreimbursed qualified medical expenses reported on Form 8889, Part 2? So it shows that she had unreimbursed expenses for physical therapist, unreimbursed doctor bills, prescription medicines, replacement of a crown, deep cleaning for teeth, over-the-counter medication, and gym memberships.
B.
280. 32, 32, 80, 33, 40. 36, 20.
Is it B?
B.
Are you saying B as in boy or D as in David?
B as in boy.
B.
So tell me what's not included.
Over-the-counter medicine and
Gym membership.
Yeah, I got C. The only thing that would be excluded would be the gym membership, I believe.
Yeah.
That's correct.
3620.
Yep.
So we count over-the-counter medication?
That's included. The only thing that's not included is the gym membership. So number 8 is going to be C. The only thing you would not include in her expenses is the gym membership. Number 4 talks about Carmen. Carmen is 61 and single. She owns her home and provided all the costs of keeping up her home for the entire year. Her only income for 2023 was $48,000 in W-2 wages. Abigail, age 24, and her daughter Andrea, age 4, moved in with Abigail's mother Carmen after she separated from her spouse in April of 2021. Abigail's only income for 2023 was $25,000 in wages. Abigail provided over half of her own support. Andrea did not provide more than half of her own support. Abigail will not file a joint return with her spouse. All individuals in the household are U.S. citizens with valid Social Security numbers. No one has a disability. They lived in the United States all year. For the purposes of determining dependency, Andrea could be the qualified child of who?
B.
Abigail.
B. Abigail. I say C. Because it's her granddaughter, right?
Dependent, yeah, they can be.
But Abigail would have to give her permission to carry her, but you have to remember that with Abigail being married, it's possible that the father could have possibly wanted to carry the child if it's in their divorce decree. We don't know.
But it said who could be.
Yeah.
Right.
If Abigail can give permission, Carmen can claim as a head of
So
household.
it would be C then.
Right.
Yeah,
If it said could be,
Right.
it could be C.
See.
C.
That's right. So 9 is C. Is Abigail eligible to claim Andrea for the earned income credit? True or false?
True. True.
True.
10 is A. That's correct. 5 talks about Helen. She's 53 years old and files as single. Her AGI is 51,000, includes $2,000 of gambling winnings. She wants to itemize her deductions this year. She has the following documentations for her expenses: $9,000 in hospital and doctor bills, $500 contributions to her HSA, $3,600 in state withholdings, $300 in personal property taxes, $400 to her friend's personal GoFundMe, $275 cash contributions to the Red Cross, $200 fair market value of clothing, $7,300 in mortgage, $2,300 in real estate tax, $150 in homeowners association fees, $3,000 in gambling losses. Helen can claim the $150 homeowner association fees as a deduction on her Schedule A. Is this
False.
true or false?
False.
False.
That's correct. That's false. What amount of gambling losses is Helen eligible to claim as a deduction on her Schedule A?
C.
2,000.
How much
That is-
wins did she have?
Up to the winning.
That is
She
correct.
said 3,000, but according to the
2,000.
record, it must match whatever her winnings are.
That's
Mhm.
correct. So 12 is C. 6 talks about Mike Cooper. He's 26 years old and single. He provided all of his own support. He works at a grocery store and earned $15,250 in wages. He was not a full-time student, but took 2 management courses at a community college to improve his job skills. He wants to know if that qualifies for any tax benefit. He is a U.S. citizen and lived in the U.S. for the entire year. He has a valid Social Security number. Is he eligible to claim the lifetime learning credit on his 2023 tax return?
Yes.
That is
Yes.
correct. That's true. Which of the following is a requirement for Mike to claim the earned income credit with no qualifying children? He must have a Social Security number valid for employment, must have lived in the United States for more than half the year, must not be the dependent of another taxpayer, or D.
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 David.
All the above.
D. That's correct. All of the above.
Ooh, that's not bad.
7 was Matthew and Rebecca. That's that's the one that you have to do the tax return for. We know that he's a public teacher in the school. They were married, filing jointly on the return. He worked 15 hours in 2023 in the school, spent $733 on unreimbursed expenses. We know that she retired in 2020, began receiving her pension. He settled credit card debt and received a 1099-C. She received $200 from jury duty. Their daughter Safari is in her 2nd year of college, pursuing a bachelor's degree. She does not have a felony conviction. They are all U.S. citizens with a valid Social Security number. I'm not sure how far you all got in the in completing the return. Can you all see the return here?
Mm-hmm.
Yes.
Okay. Let me see if I can pull my 6740. Okay. Did anyone finish entering this?
No, I did
No.
not.
No.
So the number 15 of the 6744 asks, what is the taxable portion of Rebecca's pension from Riverside Enterprises using the simplified method? And so it is not going to be the 20,000 because we had to use a simplified method.
C.
That's why I stopped there right there. I was actually working that one out.
Okay. So the answer is actually C.
Oh, we are, okay, we're on 15, okay.
Is that consistent with box 2A? I mean, it tells you the taxable amount was 19,419, right?
Right. Well, no, so when, right. So when the form in the 6744 is blank, you have to figure out what the taxable amount is using the simplified method.
Normally you're going to be told something like you won't have to figure that out. The payer is going to put that in there for you.
Right. But sometimes you're going to get a form just like the one that's in the 6744 where the taxable amount, where 2B is going to advise you the taxable amount has not been determined. And so you'll have to use a simplified method within the software in order to figure that amount out.
Okay.
So the answer is C.
How would you get to that in the software?
Yeah, can you show us again?
There was a link in there for you to use.
Yeah.
Let me go back.
Can you show what did you plug in so we can
Let's see if it'll let me back in.
we can reverse engineer.
So the answer is C, right? Is that correct?
It's C, 19419. Let me see if it'll let me back in.
Logged out.
I know. Oh, come on.
Yeah, pick it up.
So here, once you enter the $20,000, it's gonna automatically populate the taxable amount. But because the form said the taxable amount was not determined, you'll have to click here where it says, do you need to calculate? Are you all able to see this?
Yes.
Yes.
So you'll have to click here where it says, do you need to calculate your taxable amount? And so once you click there, then you will have to do the simplified method worksheet. And so you'll need that information from the 6744, or the taxpayer will have to provide you that information. The plan cost at the annuity, the start date, the age of the recipient when the annuity started, the number of months they paid, whenever they retired, all of that information will be needed. And so the 6744 gave us all of the information we needed. But if there's a taxpayer in front of you who provides you that 1099-R and it says the taxable amount has not been determined, they'll have to provide you that information.
So it's November 2023, the starting date is November 1st, 2023.
I'm sorry?
Is it the date of annuity? Is it November 1st, 2023?
I don't understand you. I can't understand you.
No, in the information he gave about the starting date of the annuity, is it November 1st, 2023?
November 1st, right.
Yeah.
It's 2020.
So she retired in 2020. She began
2020.
receiving her pension November 1st of that year.
Okay.
And so her starting date would be November 1st, 2020. Then the age of the recipients at that start date is going to be so because it's a joint annuity, it's going to be however old they were together at that start date.
Okay. And it's a 12 months in 2022, right? Okay.
Right.
Gotcha.
So you actually add their ages together?
Right, because it's a joint annuity, you'll have to add their ages together.
Oh, okay.
If it was a single taxpayer, it would be just their age. But because it's a joint annuity, then you'll have to add their ages together.
Thank you.
All right.
Something new. I never.
Any other questions as it relates to number 15? Number 16 asks, is all of Rebecca's Social Security benefits are taxable according to the Social Security benefits worksheet?
No.
And I don't even have to go to the worksheet. I can show you here on the 1040 line 6B. And because we know that her the Social Security total amount was 22, the taxable amount is only 19. And so we know that that's going to be false. So number 16 is B. On 1040 Schedule 1, it asks what is the total amount of other income reported for the Monroes. The answer is C 1050. Because we know that they had the cancellation of debt and they had the $200 in jewelry pay. Matthew is eligible to deduct qualified educator expenses in the amount of what?
$300.
$300.
Yes.
Asks what their standard deduction is.
27, no, maybe more than that. 20. 27 plus, is it 7,000 per kid? And 3,000. Is it D?
B.
D like David? For two people, 27, and they have the kid, right?
No,
No, it would be B as in boy.
Okay.
What is it?
I was saying B as in boy.
No,
I don't-
Oh, they're married, Solid joint.
Okay, C. C.
It's 29,200.
Yes, C. Yeah, they
C.
recently went up. I'm sorry, because I was thinking about last year's standard deduction. It's C. It just went up. I forgot.
Yeah, so their standard deduction is 29,200. Which of the following expenses qualify for the American Opportunity Credit? Require course-related books and equipment, tuition, parking pass, both A and B.
D, David.
Yep, David.
Both A and B.
A and B.
D, that's correct. It's going to be D. Number 21 says the Monroes are eligible to claim the credit for other dependents on their tax return. Is that true or false?
True.
That's correct.
Can you tell me, is it because of the kid?
Yes. And so because she does not qualify for the child tax credit, she qualifies for the credit for the other dependents. Number 22 asks, what is the Monroe's total federal income tax withholding?
Let's see. His was
74.90.
74.90.
That's correct. And that's D.
Great job, y'all. Y'all doing great. You got it.
So that takes you all through the advanced certification through scenarios 1 through 7. The only thing that is left for you to do is 8 and 9, and then you will be complete for the advanced certification. 8 and 9 does require for you to input a tax return into the practice lab, just like we started doing for advanced scenario 7. They are not as long. I know 9 is not as long as 7. 8 is about as long, not as long as 7. So it should not take you as long. I did put my email address into the chat. And so that if you have any questions after tonight, you are more than welcome to send me an email. I am more than willing to answer any questions that you have. After tonight, shoot me an email, and I'll be more than happy to assist you at any point at any time. All right.
I have a question before you leave.
Mm-hmm.
Are lunches included on Schedule C as expenses or not?
For a business?
So if I'm an individual and I have a little side business, I say Uber, would my lunches be included?
No, so you drive Uber and you pull over and have lunch?
Mm-hmm.
Yes.
No.
Not business related.
Okay.
Can we watch the videos? So in case if we have questions, like, how to, or like, annuity, I did not know the math until I saw the stuff you did. Is there any way we learn what we not able to catch in the class and on
Yeah.
in the videos?
I'm sorry. Yes, the sessions have been recorded. Now after we finish this up tomorrow, I'll process those recordings and find a way to share them. I think the files might be too big for me to email, so I'll see if I can compress them. And if not, I'll find some website to host them and share them with y'all and let y'all know via email.
The Hunter, that's not the thing. And I'm definitely we'll watch that. I mean, in the lab, they have some videos in the practice before the practice. Are they related to these scenarios?
Oh, I'm sorry. I'm not sure exactly which. I haven't watched those videos in the practice lab in TaxSlayer. I would think they pertain to the different things you're doing in TaxSlayer that you're also doing in the test and in the practice scenarios, but I haven't watched it myself, so I can't say for sure how closely they relate.
Okay.
So if you go under irs.gov, the VITA TCE Central, there are, or if you go under the Link Learn certification, those classroom presentations or the instructor presentations, those are available to you. You are able to use those. But if you go under irs.gov, there are different presentations that are available that are a little bit more detailed than the presentations that I use. That may give you a little bit more information. The publication 4491 gives you a little bit more detailed information than what I also used. I used that publication 4491 in conjunction with the slides that I used that I showed you all on tonight. So you may, there may be another resource for you in your training. I will refer you to that as well as that VITA TCE Central location at irs.gov to give you more in-depth information.
Oh, what's the deadline to finish before 22nd?
Yeah, so the only requirement is that you've completed the necessary certification and passed the exams that you need for your volunteer role before you serve at the site. So, with that in mind, there's not like one specific date where it's due. It's just before you serve at our site. And given that our United Way sites, our planned opening date is the 22nd, that's the date we're telling people. But, if you don't plan on volunteering until I don't know, the 1st of February, then, it wouldn't be due until the 1st of February. It's just they have to be completed before you can serve at the site for us to be in compliance with the IRS.
Oh, wonderful. Thank you.
Hunter, I just want to say that's my new email address because I couldn't get into the one that you sent all the other information to me. Okay.
Okay, I'll add that to the mailing list. Thank you so much.
Thank you.
All right. If there's no other questions or concerns, again, you all can reach out to me if you have any other questions or concerns after tonight. Reach out to me. I did put my email address in the chat. If you don't receive it, or if you need to reach out to me after this and you don't have it, you are more than welcome to reach out to Hunter, and he can shoot me an email and or put us into contact with each other. All right.
Thank you.
Thank
You
you
are
so much.
welcome. Thank you all for allowing me to participate this year again.
So much. You did so
I
good.
appreciate it.
Yeah, wonderful.
Yeah.
Beautiful.
Thank you, Laquisha.
You
Yeah,
are welcome.
Thank you.
appreciate it. Bye.
Come on, man.